Today, we're diving into a stack of sources that you sent over, all focused on a name that has been, well, lighting up the screens lately.
Right.
IREN Ltd.
It's been impossible to ignore, that's for sure.
And specifically, we're looking at this one incredibly detailed, and I have to say, incredibly bullish analysis report. The title alone says it all. IREN Analysis. The AI and Bitcoin breakout to $100.
Yeah, they're not hiding their conviction with that title.
Not at all. And it's all built around this recent market action, the headline, IREN explodes plus 9%. So our mission today is pretty clear. Is this the real start of a run to $100? Okay, let's unpack this.
I think that's exactly the right question. Because when an analysis puts a triple-digit price target out there, especially on a name this historically volatile, you know it's not just about charting.
Right.
It's about a whole new story. A new narrative that they believe fundamentally changes how you have to value the entire business.
Exactly. So we need to get into the weeds of this report.
Well,
We're here to pull out the evidence, the specific financial data, the technical triggers that these analysts are using to justify such an aggressive call.
and we should ground everyone in the timeline here. This is all centered on the trading data from January 12, 2026. The entire argument is that this day was the inflection point.
The moment the market woke up.
The moment the market supposedly woke up to the idea that IREN is no longer just a crypto miner, it's becoming something else entirely.
What a day that was. I mean, if you were watching the tickers, IREN absolutely exploded. We're talking up a staggering 9.34% in just one session.
Yeah, that wasn't a slow and steady climb. That was a statement. An explosive move with serious conviction behind it.
The specifics really do matter here, don't they? The report details how the stock closed the day right at $50.33, a $4.30 gain.
And that close above $50 is, according to this analysis, the whole story, or at least the beginning of it. A move like that, in a name that big, you have to look under the hood.
I was looking at the intraday action they flagged. It opened down around 46.72, then just ripped higher, hitting a peak of 51.62. But here's the question I keep coming back to. Why does $50 matter so much?
It's a fair question.
I mean, it's just a round number, right? Why is this one specific day, this one price level, the massive trigger for a conversation about doubling to $100?
It's all about psychology. It's a huge, huge psychological barrier. In technical analysis, these big round numbers, 50, 100, they aren't arbitrary at all.
They act like magnets for orders.
Exactly. They are massive anchor points. Think about it. They're common strike prices for options contracts, which means huge open interest is clustered there. They're targets for institutional funds to take profits or initiate positions. And just as importantly, they're mental stops for short sellers.
So breaking through it decisively and closing above it, that's not just a technical event. It's a psychological one. It flips the script.
It's a total script flip. The analysis says that breaking, and this is the key word, holding above $50 sends a massive signal.
A signal to who?
Not just to us watching at home. It triggers the algorithms, the big quant funds, the institutional buyers. Their systems are coded to see a break of a level like that, especially with high volume, as a major buy signal.
And the report makes a huge deal about the volume. It says huge volume accompanied the move.
Yes, and that's the validation. That's how you know it's not just, a bunch of retail traders chasing momentum.
So how do you tell the difference? I mean, for someone listening, how do you distinguish that speculative noise from what this report calls committed institutional interest?
It's a great question. You look at the quality of that volume. Does it come in one big spike at the open and then fade away? That's noise. Or does it stay consistently high throughout the day? And especially, does it surge into the close? That sustained pressure, pushing it to a close above the key resistance level, that implies commitment. The analysis is basically saying the big money is starting to position itself.
They're not just day trading. They're building a long-term position based on a new thesis.
That is the argument precisely. And just to put the scale of this ambition into perspective for everyone, at $50 a share, IREN's market cap is sitting somewhere in the ballpark of, $17.5 billion?
Right.
For these analysts to even whisper about $100 a share, they are calling for that valuation to double to $35 billion. Momentum and a one-day pop can't do that.
Absolutely not. Momentum attracts the traders, but you need fundamentals to attract the real long-term investors.
Yeah.
And that brings us to the core reason for the move.
The why behind the buy.
The why behind the buy. The report calls it the dual engine driving the stock.
Yeah.
And honestly, here's where it gets really interesting for me.
This is the pivot point for the entire bull case. The argument is that the stock is undergoing a fundamental revaluation because the market is finally seeing its two halves.
It's operational bifurcation, as they put it.
Right. It's being powered by two very distinct, very high growth, but also very different engines.
And the idea is that they've finally broken out of that box of being just a Bitcoin miner. So What are the two components? How do they actually work together?
Okay, so the first engine is the one everyone knows, their profitable Bitcoin mining operation. The analysis frames this as the bedrock, the stable cash flowing utility.
Okay, a cash cow.
A cash cow, exactly. It provides reliable revenue, it's mature, it's optimized. But the second engine, that's what the report calls the rocket fuel. That is their aggressive and apparently very successful expansion into high-performance computing.
Specifically for AI cloud services.
Specifically for AI. This structural shift is everything. It means investors no longer have to view the company solely through that, that volatile, cyclical lens of Bitcoin's price.
They get to add another label. They earn the right to be called an AI cloud services provider. That's a huge leap in perception. You're moving from a commodity producer to a tech infrastructure play.
And this isn't just a dream or a press release. The report backs it up with hard financial data. They keep using the phrase record-breaking to describe the company's fiscal year performance.
And these numbers are the foundation for the whole argument, so let's pull them out. For fiscal year 2025, the analysis highlights a record revenue of $501 million.
Hitting that $500 million mark is a big milestone in this space. But I would argue the next number is even more important.
Profitability.
Yes, profitability, because a lot of miners struggle with efficiency. The report points to a net income of over $86 million for FY25. That shows the operation isn't just big, it's efficient.
So let's connect the dots here. Of that $500 million in revenue, even if most of it is still from mining, the fact that they're clearing $86 million in pure profit means the core business is incredibly healthy.
Very healthy.
And that health, that cash flow, essentially de-risks their big capital-intensive push into the AI data center space.
That's the synergy of the dual engine right there. Think of it like this. The Bitcoin mining is the steady, if cyclical, paycheck that funds the construction and expansion of the AI data center,
Which command a much higher valuation multiple from the market.
a dramatically higher multiple. So the report argues that this combination profitable mining married to the, and I'm quoting here, limitless growth of AI data centers, it completely changes the company's profile. You're not a cyclical miner anymore. You're a growth infrastructure company.
You can't argue with proven profitability. It's the perfect hedge against the crazy swings we see in the crypto market. It gives them stability.
It gives them stability and it gives institutions confidence. The market can now apply that sexy AI multiple to the business without the nagging fear that the company might, run out of cash during the next crypto winter.
Right. The mining profits provide a floor, a safety net.
Exactly. It's the institutional confidence they need to bet big on the future earnings from the AI side of the house.
Which brings us right back to the headline question from the report. Is $100 really next? If we look at the consensus Wall Street targets they shared, analysts already have a strong buy rating on it.
And the consensus, which, let's be honest, usually lags a bit, is already pretty bullish. The average price target they cite is around $69.
Which from 50 is, what, nearly a 40% upside right there. That's a very strong baseline expectation.
It is. But the real excitement, the whole reason we're doing this deep dive, is because of the top end of that range, the bull case target.
It goes all the way up to $136.
136. Now, to get from 50 to 100, let alone 136, that requires more than just good earnings. It requires a radical reevaluation by the entire market.
And that's where this concept of a re-rating comes in. It's the most critical part of this whole analysis.
It's everything. So the report notes that IREN currently trades at a price-to-earnings multiple, a PE, of around 29. Now, a PE of 29 is perfectly respectable, healthy even, but for a dedicated AI infrastructure company, it's cheap. It's fundamentally cheap.
So let me make sure I'm following this. If the stock is going to double to $100, but their earnings don't immediately double overnight, then the PE multiple itself, it has to expand massively.
It has to do all the heavy lifting. That's the mechanism. The analysts are assuming the market fully accepts this identity change.
What kind of multiples do those other pure play AI companies get?
Well, the pure plays, the ones that are only in high-performance computing, they often trade at PE ratios of 50, 80, sometimes even over 100 times earnings if their growth is explosive enough.
Wow.
So the whole argument is built on the idea that if the market fully re-rates IREN as an AI data center company, then its multiple is going to inevitably expand to be more in line with those peers.
So let's do the math on that for everyone listening. At $50, we said the market cap is about $17.5 billion. To hit 100, it needs to get to $35 billion.
That's the hurdle, yes.
And the only way you get there without earnings doubling is for that PE of 29 to basically double. The jump from a PE of 29 to, say, 58 or 60, that's what gets you to $100 a share.
That is the path.
It seems aggressive. But the analysis makes the case that a $35 billion valuation is, and I'm quoting again, not a crazy number. Why do they think that?
Because of that unique positioning, the dual engine. Their argument is that IREN is powering the two biggest trends in the world, crypto and AI. They're not just a miner, they're not just a data center. They are critical infrastructure for two of the fastest growing ecosystems on the planet.
And the market is willing to pay a premium for that kind of diversified exposure.
A huge premium. It's a company that offers you a stake in two massive world-changing trends that also, in a way, hedge each other. That's a powerful story to sell.
The synergy argument is pretty compelling. The steady, if boring, earnings from mining justify the high-flying multiple you apply to the AI growth story.
It changes the entire risk profile of the investment. Analysts are betting that the market will stop valuing IREN like a commodity producer and start valuing it like the tech infrastructure company it's becoming.
Okay, switching gears for a second, the report also gives a very clear, very near-term technical trigger that, you can watch for on your screen right now.
It does. While the $100 target is the big long-term prize, the immediate level they say to watch is that intraday high from the breakout day.
$51.62.
51.62, that's the next domino.
And if the stock can clear that level and hold above it, what does the analysis suggest is next?
It suggests that the momentum is confirmed. It means the immediate supply of sellers from that first pop has been absorbed, and the report implies there's very little resistance left before the stock starts challenging its old all-time highs.
So it's the final validation that the breakout is real and sustainable.
In the short term, yes. It's the green light.
Okay, so this brings us to the summary of this entire analysis, which is all built on this idea of a profound identity change. So what does this all mean?
It means we have a really coherent, well-supported, bullish thesis, and it's built on three core pillars that you can actually observe and monitor if you're tracking this stock.
Right, let's lay them out. Pillar one is the technicals. The breakout is concerned by that massive volume, and it closed and held above that huge $50 psychological level.
Pillar two, the fundamentals. The record-breaking performance of that dual engine. You've got the $501 million in revenue and, crucially, that $86 million in net income, proving the base business is profitable and stable.
And that stability enables pillar three, the valuation story, the potential for a massive, aggressive valuation re-rating. That's the PE multiple expanding from 29 up towards 60, driven entirely by the market accepting its new identity as an AI infrastructure provider. That's your path to $100.
And if we just zoom out for a moment and we connect this specific analysis to the broader market, and if we accept the premise they've laid out that a $35 billion market cap for a company powering both AI and Bitcoin is not a crazy number,
okay,
then this raises an important question.
Which is?
Well, this analysis suggests that the market here in 2026 is finally starting to reward diversification, that it's prioritizing the stability of a dual engine model over a pure single sector focus, at least when it comes to high growth companies. So the question for you to mull over is this. What other companies out there are currently stuck in one box? Maybe they're seen as just a green energy company or just a boring old industrial, but they have a profitable emerging secondary business, a hidden engine that is ripe for this exact same kind of massive synergistic re-rating. That's the real takeaway here.
A fascinating thought. You've been given the roadmap from this analysis. Now it's time to see if the market decides to follow the script.